Good day, everyone. Good day, everyone, and welcome to this particular section. I'm so excited to share with you deep secret about Forex. Especially, I'll be focusing on entry and exit strategy, and I'm excited because I'll be sharing directly from my own book, the book that I've written as regards entry and exit. Now look at the front page here. Look at the front page. Forex master entry and exit, and I'll be sharing directly from this group, directly from the now. The reason why I'm doing this video directly is because I want us to have an in-depth, absolute knowledge about entry and exit. Why? Because many people will be in profit but don't know when to close their trade, and then there will be reversal in the market and they will lose all what they have gotten in profit. Now, meanwhile, before we go deep into what we are having, please don't forget to subscribe to this channel, turn on the notification bell so you'll be notified whenever I upload a video such as this, and don't skip this video for any reason. Don't skip this video. Watch to the end. Watch to the end. Why? Because I'll be teaching you deep things as regards entry and exit that you can use in order for you to kill the market. Now, let's move on quickly. This is my PDF. Now, the first thing I want us to understand that helps us to take profit to get a good entry and exit is time frame alignment. The first one is the time frame alignment, and then the second one is the candlestick entry and exit. That's the second one. The third one is our the third one still trying to get it. I don't want to mix it up. Well, I've missed the third one. Okay, chart patterns. The third one is chart patterns. Let me see. Is chart patterns, and then yes, see it here, chart patterns, entry and exit. And then the next one, which is number 4, is our indicator entry and exit. And then number 5, we have our support and resistance. And lastly, number 6, we are having our breakout strategy, which help us in our entry and exit. Now, I want us to understand that every area of entry can serve as an area of exit, and any area of exit can serve also as an area of what? Entry. Why? Because if you are exiting from a trade, you are going to another direction of another trade. So every exit is another word entry, and every entry is another exit. Put that at the back of your mind, because there are times that I trade both bullish and bearish, and the people begin to ask me if I am the owner of the market. But it's simple. Understanding the market helps you. So we are going to be looking at these points that will help us to get a very good entry and exit point. Now we're looking at 6 different strategies that will help us in getting accurate entry and exit. Like I said in this video from the beginning, don't skip any part of this video. I will be as fast as possible because I don't intend to take much of your time. So I'll be as fast as possible, but in my speed try to learn everything that I am teaching. In fact, you can go over and over and over again until you digest it and gain full understanding of that which I am doing. Without you getting understanding, I will advise you stay until you understand. Repeat the video again and again until you are sure that you have understand. Then you can move ahead. Now, thank you so much. I actually want to appreciate also our returning viewers and also our new users. Thank you so much for finding it fit for you to watch our content, our training. Now, the first is the time frame alignment. What is alignment first? And what is time frame? Now, in the forex market, we have what we call time frame and we have what we call alignment. Now, I just moved to my MetaTrader now. You see now we're having 1 minute time frame, 5 minutes time frame, 15 minutes time frame, 30 minutes time frame, 1 hour time frame, 4 hours time frame, daily time frame, 1 week time frame, monthly time frames. Now, um, these are time frames or duration whereby candlesticks are being formed. Now, these are duration in which candlesticks are being formed. Now, if you want to trade on 1 minute time frame, it means that for every 1 minute, new candlestick is being formed. Now, if you want to trade in 5 minutes time frame, this means that for every 5 minutes, new candlestick is being formed. Now, if you want to do it on 15 minutes, you know that for every 15 minutes, new candlesticks are being formed. So also we have the 30 minutes, we have the 1 hour, we have the 4 hours, etc, etc. Now, what is alignment? Alignment means falling in place, falling in the right place. That is alignment, falling in the right place. Now, when we see that the time frames, the different time frames, because we are using multiple time frames now. When I mean multiple time frames, we are using more than one time frame in our analysis. Now, for example, now I usually use the 4 hours time frame, which is my first hour time frame, and then followed by the 1 hour time frame, and then the last, which is the 15 minutes time frame. Now, if there is an alignment in the three time frames, that means if 15 minutes time frame, 1 hour time frame, and 4 hour time frame is going for a sell, that's bearish, is going bearish, or is going for a sell, this means that there is high volatility in the market, and then you can ride it until you start seeing rejection of high prices in the market before you close the market. So time frame alignment is actually very important in our exit and entry. Once you are aligned, once the higher time frame and the lower time frame is aligned, you can enter. That is an entry point. Now look at it. Now if the 1 hour time frame, look at this place. Now look at this particular place. Let's say here, and then 15 minutes time frame, come down to 15 minutes and time 1 hour time frame, you discover that we are seeing a clear chart pattern here. Now if you see something like this, and then you discover that in the 4 hours time frame is telling you to buy, which is bullish, and then in the 1 hour time frame it has aligned with the 4 hours time frame and is also what bullish, and you came down to your 15 minutes time frame and then you see it bullish, it means that your trade will be going for a buy. It means that it will go for a buy. That is how you enter your entry. And how can you exit it? You can also exit it when there is opposite alignment. That means coming for a sell. There is opposite alignment. Now once there is opposite alignment, you what? You close your trade. That is how you can use the time frame analysis. Now look at this particular video. Now see this side. You see, it was this side was actually selling, and all of a sudden we saw that there was a corresponding buy trying to happen, and then it also aligned with the 4 hours. It aligned with the 4 hours. It means that we are actually in a crucial support and a resistance zone. And then we have the 1 hour. You discover that there is a little advantage in the support area at the 1 hour time frame. Now when you understand this, you already know that the 15 minutes time frame will fall in alignment also, because the 15 minutes time frame is just like our go ahead to trade. It is like a permission for us to trade. Once we see that alignment in the lower time frame, which is the 15 minutes time frame, then we are permitted to either exit our trade or we are permitted to start a trade. That is just how we can use the multiple time frame analysis for us to trade the financial market. Now I just finished talking about time frame alignment. Now the next one is the candlestick entry and exit. Now the candlestick is actually the diagram or representation of price in a candlestick pattern, a representation of price or the movement of the market. That is what we call the candlestick. Now the candlestick have what we call different formations. Now we are having a continuation trend, we are having the reversal trend, and then we're having other major patterns that can be actually used as an entry and as an exit. Now we have the body, we have the wick in the candlesticks, and then in the candlesticks we have patterns. We have the single candlestick patterns, such as our hammer, such as our doji, such as our spinning. We have others, etc., etc. Those ones are used to show reversal and entry point in the market. Now it can be single and it can be what? Double patterns. Now most of the times I advise people to focus on the double pattern, because double patterns are more authentic than the single patterns. Now the double patterns, we're having the engulfing candlesticks, we're having the trusting candlesticks, we're having harami candlesticks, we're having rising wedge, the falling wedge, etc., etc. Those ones are they are our patterns. They are our patterns that is being formed by the candlestick. Now these are our patterns. Now they can be reversal patterns, they can also be continuation pattern, but at the back of your mind, put it in such a way that once you see some specific kind of patterns, it will tell you what will happen in the future or in the nearest time. Why? Because you have now understand what this pattern is. Now we have the triple patterns also, and we have other kinds of patterns. Now under those patterns candlestick, we're having the rectangular, we have the rectangular, the flag, we have the triangle pattern, and then we have the head and shoulder pattern. We have the wedge pattern, we have the rectangle pattern. Now these are patterns in which the market follows in order to give us prediction of what is happening. So once you see such kind of patterns, you know this one is a reversal pattern, this one is a continuation pattern, etc, etc. Now let's move on. um, types Different types of forex chart patterns that can help us, like I mentioned, the continuation chart patterns, the reversal chart pattern, and then we have the ranging chart pattern, the ranging chart patterns. Now let's forge ahead. So like I said, we're having different types of patterns. We're having different types of patterns, which I started explaining to us, so that we'll be able to put at the back of our mind that there are many things to actually learn. There are many things to actually learn. I know that I am quite fast, but just bear with me. I don't intend to make the video long, that's why. Now you see we have reversal patterns. Now this is how to trade them also. Now how to trade head and shoulder patterns. Now this should be also part of the patterns. Now we have the indicator strategy. Now in the indicator strategy, now we are using actually our indicators in order for us to take profit and for us to be able to enter the market. Now, like I used to tell people that indicators alone are not good, but indicators combined with other things are good. Indicators alone are not good, but when you combine the indicators with the knowledge of something, you discover that you are flourishing in it. Now there are different indicators that you can use. Like I used to tell us that if you use the 200, the 50, the 500, the 800, sorry, and then the 200 moving average is actually an area of dynamic support and resistance. Dynamic area of support and resistance. Now this means that the support and resistance in that indicator can be broken. It can be broken easily, just that it gives a dynamic support and resistance. Now if you are buying, and then for example look at this video, you discover that it bought and then it touches the 200 moving average. Now that alone can serve as an area of take profit, and then you want to enter. If you want to enter a trade, now you have to wait until there is a confirmation, a clause on the moving average before you can be able to enter any trade. You must be able to see a clear crossing, either from the top or from the bottom, but you must see a clear crossing for you to be able to enter a trade. That is how the moving average is being used. Now the next one is a support and resistance. Now price, like I used to tell my students, price always respect previous support and resistance. So now for we to be able to take profit, we can only focus on even the support and resistance and still make profit. Why? Because price will always respect the previous support and resistance. Now, for example, if I am to buy, if I'm buying this market now, I should be able, if I'm, I should be able to target this particular place as a point whereby price must touch it before it reverse back. Why? Because of the nearest resistance that is there. So I expect that price will actually come down and then reach that level. Now, um let's see. Now we're having this coming down, we're having this going for a sell, and we don't know where it will land us to. Now, for you to be in a safer side, you should put your take profit at the end of the other support or resistance. Put um your stop your take profit at that location. Put it at that location. Now, the moment you don't put it at that location, it might be exposed, and then it might reverse back, or it might continue the trade, and then later on there will definitely be reversal. There will be definitely be reversal in the market. Now, if you look at the support, area of resistance, you will know that you can actually use it for your take profit and your stop loss. Now, um I just hope this is not much, because I don't intend to make it much. Okay. Now, you can get the book. If you want the book, just chat me up, I'll do the book. Now, breakout strategy. Now, breakout strategy is the last strategy that I'm going to be using to teach us as our area of entry and exit. Now, for every breakout is an entry, for every breakout is actually an exit. Now, for example, now you see there was actually a breakout at this particular place here. There was a breakout upward. There was a breakout upward. And if you check where, you discover that many support and resistance were created. Many of them were created, and then um, we discover that after the breakout, the price came back to test the region. Price came back to test the region. Now, I want us to put it at the back of our mind that after every breakout, price must come back, or price normally come back to test. Normally come back to test what impact can the breakout do. Why? Because breakout always work with our support and resistance. Breakout work with support and resistance. That is how we use it, because we draw a box. Now, for example, let me give you an example. Now, look at here. There was a breakout downward. We saw a breakout downward, and then after a while it began to go up in order to respect this particular breakout here. So that is how it is. That's how it is. I told us from the beginning that for every entry it is an exit. So thank you so much for watching this video. If you have not subscribed, do well to subscribe to this channel, turn on the notification bell so I'll be notified, share this video with your friends, give unto us some comment and some likes so we know we're making impact. Thank you so much. Have a great day.